Good morning for this Friday, January 10th, and the first market I want to take a look at real quick here is Biogen, BIIB. If you recall here, we went long at 277.37 right here as it broke up through this high with a very small risk, all right, right below this low. And our objectives were hit easily on the day of entry, actually. Right up in here, and then the market continued to rally, as you can see, 2 days ago, rather. And the market opened up yesterday higher, rallied, and what we did was we used a trailing stop. We had a trailing stop 20 cents below the high of Wednesday, 20 cents below 290.99. So actually I had it at 290.86 right up in here. 290.86 was the trailing stop. The market yesterday afternoon came down to 288. So let's take a look at that on a 3-minute chart and see exactly where that was stopped out at. All right, this is a 3-minute chart of the Biogen trade. Market opened up, ran up to this high. Our stop was 10 cents below the prior day's high right in here. So when the market actually reversed yesterday and took out the low of the intraday low right here, we're stopped out right in here. So not a bad trade. I mean, look at long entry at 277.37. Took some profits off at 282.52 and trailed it up to 290.86, stopped out right in here. So that was a good trade. So let's just quickly put that back to a daily chart. Alrighty. And now the market is retesting these highs, or tried to retest the highs. Yesterday couldn't do it, dropped down a little bit. Let's take a look at, there's two other things that I'm looking at here real closely. Look at crude oil. Crude oil is testing some major areas, I believe, right in here, okay? So we were testing this low made back in April, this low in May, this low back in mid-November, and this is where we're at. So look at the market sold off right at a logical resistance area, right? We're right back in the gray action zone, as you can see. Crude oil changed from an uptrend, right, green bars, to red right in here, breaking down through this 200 moving average, continue moving lower, rallied up to resistance. That was a good sell point in there. But now the market is testing some major levels, right? This low here in April, May, and the mid-November low right in here. So I'm watching this very closely. It's on my radar. I'm not doing anything just yet because, quite honestly, I'm going to wait for some type of trigger bar, a price action bar to tell me that it's all right to go in. Now, could you be buying it right in here and stick your stop right down in here? You could, definitely. I don't think there's necessarily anything wrong with that. I think we are going to get the bounce. It's just I want a trigger bar of some sort. And what I mean by that is I'm looking for either a bullish engulfing pattern or I'm looking for my coil bar, right, my inside pattern. Or what I like to call a blow-off bar, where the open and close are in the top quarter. All right. So yesterday's low, took out these lows, a successful retest, and today so far we have broken up through that high, which is good. But I'm going to keep this on my radar right here, okay? And so if you don't want to trade the actual futures contract, because this is the continuous crude oil contract, you could trade it on the USO, the United States Oil Fund, okay, which pretty much tracks the crude oil. And if you take a look at that, we do have what I like to call a bullish blow-off bar here. Let me see. So again, these same lows were tested yesterday, right? We tested the November low, basically tested a June low. We tested the May low right in here, right? That's where these two white horizontal lines. So look at yesterday. Opened, right? Opened and closed near the high of the bar, which is bullish. So on the USO, you could be a buyer above 33.20 with a stop below 32.68, a closing price below 32.68 if you want to take a play in the ETF USO. And then one other, KMB, Kimberly-Clark, is starting to really consolidate, as you can see down in here. I mean, take a look at this, right? Trend is up, right? We gapped here. Trend actually, the bar turned green before the big gap opening right here on October 21st. We gapped up, we ran up, we've been down, we've been trading down, and basically what we're doing right now, a couple days ago, we pretty much retested this low. That's where this white horizontal line comes from. We're back in the gray action zone, and yesterday, or 2 days ago rather, we had an inside vertical bar right here. Okay, so technically the buy is about since it's over $100, you're talking about 104.09 roughly, and yesterday went to 104.10, closed at 103.73. So technically this is a buy setup. Okay, looking for the your initial stop loss would be below December 17th low at 102.33, and you'd be looking for the market minimum to trade back up to this high right in here, retest of those highs of 105.97. Okay, now that's trading stock, the underlying, right? You could do a call option, you could do a deep in the money call. That'd be definitely a more leveraged way to play it with a lot less money. So take a look at that. Hope that helps. Have a profitable day. Bye for now.